If we not good, then boom, phone action. But if we good, then then yeah. Make sure. All right, I got my phone in my hand anyway, so I got the chat box open. Yeah, I got the chat box open. I can see everybody. All right, cool. So let's go. If it do start lagging again, just go ahead and stop me. Then we'll just hit the phone just like that. Sorry for all the technical difficulties. That's why I gotta be better on my time, which is kind of like I'm so busy throughout the week that I don't really I don't have a consistent work schedule. I work one day and then I'm working a different shift the next day and a different shift the next day, so on and so forth. So I really just catch whatever I can throughout the week and kind of capitalize on it. Every week when we have the market outlook call on Sunday, I'm always pretty much try to really catch that outlook call, because when Kirk and Ray go over the markups or whoever go over the markups, that's pretty much, if they looking at the week, follow the leader, bro. If they looking at that for the week, I gotta look at that for the week, and just pretty much they mark up EU, but I kind of redid them. Let me see if it's still on because I eventually redid the markup myself. Yeah, I deleted the markup because I had got in EU on my own back over again. But GU, this is one that you see was marked up. I didn't mark it up at all, and then you see the liquidity at the top. Liquidity definitely came to the top. I didn't really trade. I traded most of these. I traded UJ and GU. SPX. Okay, so SPX it really it shocked me yesterday, but I can't even really be surprised of how it shocked me, because at the time yesterday I was bearish on EU because of the news, and knowing that if I was bearish on EU because I felt that the US had recovered pretty fast once they opened the economy. So when the news came out, the news came out about 7:30, which is pretty much this candle here, and it pretty much shot up for the rest of the day. And there was a couple liquidity zones over to the left. A lot of people seen a couple highs that didn't need to be broken, a double top or something like that. And it did take out the liquidity. And I can pull up on the RSI too. It's just it wasn't really ready to move. It was ready to move. You see, it hit the 80% on the RSI. It actually shot way past that. It shot past 8%. It shot to 82%, and it was starting to get ready to come down. But it wasn't so much of a. This wasn't the right day for it to come down. Is what I'm trying to say, because the banks they move. They pretty much make their hard hit, their hard moves around 7 to 10 a.m. And that's all of this bullish pressure. That was all 7 to 10. And for the rest of the day, I mean, they had to kind of die off a little steam. So that's why it was it just sold a little bit after the markets closed. But it sold a little bit after the markets closed. But I'm still not, me personally, I'm still bullish on SPX, because that was some big news that came out last weekend. And we probably we might see a little recovery. Maybe a small, maybe a smaller recovery down the hill, and then it might start to pull back and then go back up. But I'm still real bullish on SPX. And for EU, it was kind of sort of the same thing. I wanted to go bullish, take out that liquidity to the left, because it was a double top that they made early in New York session. I seen that when I was at work. So I was saying that maybe for London, I was saying that maybe for London that it was gonna take out the liquidity and then start falling to the downside. My only thing, I know I sent out the signal, but my only thing, I was just a little bit too short. This line, this yellow line, go back to the daily. Man, it's crazy. It's all me personally. It's all good. That's why I got in at the last up candle for the down move, and I pretty much like marked off the open because I noticed by the time I noticed this whole play, it was about like 10 p. It was like 10 o'clock p.m. and I was about to get ready to get up for work the next morning. So, but it was still a good eye. I just have to like be more confident and really just like pushing up real. Hold on, real quick, y'all. All right, there. My boy Cam T saved the day. Can't save the day. That's a charger. All right. All right, let's go. I'm way more confident now because the phone is not dying. The phone is plugged into the charger. It's charging. Yes, it's alive. All right, let's get it. So it spiked up. It spiked up at about 1 a.m. And this is when I sent out the trade. And just by going off of like, lately I've been studying like a lot of Wickoff. I've been studying a lot of like how the banks like really move the market. And I understand market structure and everything, but I use market structure, price action, smart money. I'm getting like used to identifying Wickoff. I can see Wickoff on a big chart. I'm trying to like really see it on a small time frame. But I know one thing about it, like with volume, like the volume sector, I don't really pay attention to London too much because I don't really trade London. The only time I trade London is if I'm at work, and it's London time, then yeah, but for the most part, I don't really trade London. I kind of trade New York. So down here at this 7 o'clock candle, you see this very big bullish like size volume, and that's basically just saying like a lot of like bears like came into the market, and that was right at 7, really right about 7:30. Of course, that was when the news event like really came out, and right at 7:30, that's when like all the bears like pretty much came into the market. But I just love how I really trade EU. Like EU is always my favorite pair. I just love how it spiked up and obviously like obvious highs, broke those highs. It broke it on this candle, but then you see like right here in London, really for like pre-London at 1 o'clock, it kind of just like doji to basically like it doji pre-London so that way it can be bearish for London, because once 2 o'clock hit, it pretty much like came right back into the same consolidation that it ended in Thursday. I go like day by day. Like this whole week, I was like really pay attention to the charts and like talking about like day by day. I damn near went to sleep in the chart. So you see Thursday, this bullish move. I like this one. I think this bullish move was Thursday morning. They had a news report. I think it was some type of news that hit for 6:45 for Europe. And you see like that made that very big bullish pressure. But I just like how for New York, this green candle, this bearish block, I just like how it came like almost right back a little bit. It didn't come back to like the 88%, but it came back and tapped like the 71%, like right here. Plus, it did it on like high volume right when 7 o'clock hit, when the bears into the market. I think there was news at 7:32. Oh yeah, it was unemployment claims for the U.S. So that was at 7:30. And you see, like, right at 7:30, I just love it. I love to see it. I love to see where these banks are at, because right at 7:30, like, let me just give you like a visual, like a visual memory of what's going on. So this line right here, this 71%, I can throw a little trend line on it real quick. So this 71%, this 71, that purple line is the 71% of this blue candle. And I like how it came right back to it on high volume. That's basically saying, like, the banks, like, they pushed price down and then they pushed it, they pushed it right back up. I don't know if, like, a lot of y'all trade in the morning, y'all see, like, around, like, between, like, 7 and 10, like, MetaTrader is, like, really moving fast, like, from blue to red. And that's just, like, kind of like the banks, like, moving like money, like, all at one time. But anyway, I just like how it came right back to it. And then after that, it just took off, and it was and it was just never the same again. 7:30 took off all the way till about 10. At 10 o'clock, that's when it made that high. So at 10 o'clock, for me, the banks are done, because you see how volume dies off right after 10. Let me go back. These three candles, this is 7. From 7 to 10, you see, like, it's pretty much like it's higher volume throughout the day, more than it is any other time. You still got New York session, like, you still got like 11 o'clock and all that. So markets are still moving, but like this just tells you exactly where the banks are at. You just see, like, volume that just don't go from so low to so high that fast. But anyway, you'll see how from 7 to 10, that was just basically like a lot of, like, bullish movement, and that one bearish movement was just so they can let other banks get in. They moved it up for London. They came right back from New York and moved it up again from New York. And that's why market structure is so, like, it's just so live. It's just so beautiful. Like, because that is bullish, bearish, and bullish. So that's literally up, down, and back up. And by the looks of it, it might want to. I do have it going back to that order block, and then taking off and maybe gave it like a little pullback and then go up again. So right. So you see the high that it made at 10 o'clock. The banks definitely made that high at 10 o'clock. Right at about 3 o'clock, 1 o'clock, they came back and made another high. Well, it wasn't really another high. It was a double top. And they was literally the same high. It was just like, it was off by 1 pip. So that's like a 10th of a pip. But basically, like, equal highs. They made it from New York, and then they basically brought price right back down, right down here, to consolidate for Asian session, because the Asian session is pretty much like consolidation session, or they like to build structure. And then you can also tell, like, right here, you also had like a nice little set of highs. Right here. Nice little set. If I'm going too fast, if anybody have any questions, anything, y'all can definitely drop them in the chat. I don't want to when I start talking, especially when I start talking about Forex, I'll talk. Like, sometimes you have to stop me or something. But if I got any questions, anything, y'all just drop them in the chat. Or if I got any pairs that y'all want me to go over, I can go over, like, real quick. But anyway, like, it was just story time. Like, all day Thursday, it was just story time, because I was literally watching the market. I've been watching this pair all week, because I was getting ready for NFP. I never really just traded NFP on my own confidence. And just off of this trade, even though it didn't really activate, like, it still went in the same direction, and it was a pretty clean trade. But anyway, I just like how it made this high at 3 o'clock. They brought price down at 2 o'clock. And then they kind of just kept price in the middle. Like, all Asian made like a little set of highs. Those highs got broken. Still in the Asian session. And then like right here at this doji, this was the candle for a lot of like smart money traders. This was the candle that took out the liquidity. But this is the candle that stopped, that basically like turned price around. This is the candle that turned price around. But this candle is the one that made that basically like the banks broke liquidity right here, and they just stopped price right here, and they was getting ready just basically like put it back into consolidation. That was just a move just to get ready for London. So I really try to like look at this thing as like sessions or draw a line like right here. Drop a if y'all understand, like drop a 777 in the chat. I don't want to like be going too fast, like or like losing anybody or anything like that. Oh yeah, we going hard. Oh yeah, we going hard. 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 But yeah, so this candle, like once I drew this line, this is basically like pre-London, and then London started. So they moved price like right back in, and then it just chilled, stayed consolidated, This is 4 o'clock, 5 o'clock, 6 o'clock, nothing moved, stayed consolidated. 7 o'clock, boom, there go the banks. And really, not even at 7 o'clock. To be more specific, 7:30. They came in at 7:30. And I like how like they just, these dojis, basically like price, like it moved up a little bit. Like this green candle right here, take off this yellow. This green candle right here, it's a bearish candle. So basically this tells me like price started in the middle, it went down a little bit, it probably came down like up here, it moved up here, stopped back right here. On the 30-minute, to me, that looked like a liquidity candle. It looked like a liquidity candle because for all the smart money traders, in the 30-minute, those are highs. They took those highs out just to get ready. And they didn't know, like, maybe they knew what was happening. That's kind of why I'm really like digging into and digging into like economic news and stuff already going on. They just kind of have to like really manipulate people off. But anyway, 7 o'clock, you see how it took out their liquidity. 7:30, boom, it made its move. I woke up at about 7 that morning, and I seen that move, and I was like, yep, it's all good. I didn't miss my move. CST, yeah. On the chart, yeah, I am. So it's like real time. But yeah, my thing is, we already entered, like we already broke into, like on the daily, we already broke into this last up candle before the down move. Let me take volume off. We already broke into, because right here at like about New York at about 3 o'clock, 1 o'clock, that's when we broke into that zone. So I feel like since we didn't like break into that zone, since we broke into that zone already, then I feel like it probably would have to just like keep breaking up to like the next zone and then fall down. But it's all good. Like I said, I figured that like during London they would have pushed price up a little bit more and then fall. It's all good. So like I said, I wanted to come back to this order block right here. It looked like it's getting ready to come back to it, because if y'all can see what I see, y'all know what I see. I like double tops and double bottoms. I ain't even look at the chart since Friday, and I already like what I see now. Like little equal lows, look like some. I consider them equal lows, and it's right below the little order block that I said it was gonna come back to. Plus, after all that bearish pressure, we do need some type of pullback. So for sure, I want it to come like down there. But first, we gotta actually get down. Before we get down, just go. That's gone. The same spots from where it actually made those bank moves is where I kind of want to come back to. Nice points of interest. But But yeah, it's just so much fire. Like it's just so much like just fire just everywhere. Like just fire, 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 bro. Because I was like this trade was so close. Like I ain't gonna lie, I put a lot a lot of limits on that. I put a lot of limits on that trade. They was all like risk management accounts. But basically, like if that trade would have activated, like seeing the blue screen, it's all good. And plus, like I really like trained, like I really waited all week for that trade. Like that was the only trade like this this week that I really like was interested in. There was two other trades. I went over US. I'm gonna go over USD CAD and USD Swish. Those was the two trades that I also took. They was both losses, but they was good losses. Like it was. I think yesterday was all about lessons. Like I learned a lot of lessons this week, and they was all good lessons. Like yeah, I ain't gonna lie. We was on Coffee and Pips early that morning. Boy, I was confident in it too. I seen the liquidity zone at the bottom. Boy, y'all put on bounce back, and then man, it was just crazy. Like we had a lot of confidence in it, but like that day when we got clapped, I understood why we got clapped, and that's kind of like why I really like dug into like volume. But for this trade, Diggs Y2 bearish, it had bro, it was going bearish, and then like I don't know if like last week, well not last week, this was like when we were still in Telegram. EPS he dropped in the chat, he was saying that like for NFP week, like price would typically like move in one direction, and then by the end of that week on NFP day, price would just like change and it'll go the other way, and that's why I was bearish on EU because I was bullish on EU like early in the week, and you see like it was moving like moving. This move was crazy. Oh, what this move was like. This is the most beautiful move in the world because I didn't get any. I watched it. Matter of fact, I had a buy limit set on it. I don't know if y'all MetaTrader been tripping, but like if lately I've been set like sell limits and buy limits, and things have not been activated. But like you see like the last down candle, and then it just pushed up real aggressively, and it came right back to it again in New York, and then it lifts again. So volume. Look, I love to see it. I love to see it. It made a big up move at 4 in the morning. There was no news or nothing. The banks just moved the market at 4 in the morning, just took out all that liquidity to the left side, and it came right back down, and then it took off and go up. Buy limit few pips. I think that's what I got to do too. I don't know what's going on with my MetaTrader. It's just like sometimes limits will activate, sometimes they don't. The buy limits, they've been activating a little bit, but like with the sell limit, it'll turn green like it's about to activate, and then price will pass it up, and it'll go right back down. Like you ain't gonna take my sell limit. Like nah, I need to jump in the trade now. Or I need to start setting alerts or something like that. But anyway, like these bank moves are beautiful bank moves. Just like earlier, how I said it came back to the 7.18%, and then it took off and ran. It did it again, right for London, New York session. It was very bullish in London. New York was the pullback. 10 o'clock, it made its final move, and then it just kind of just took off and left. So yeah, EU was looking real good. Just beautiful. EU is looking great. So yeah, that was Friday. Wednesday. Let me jump around. I like to jump around because I know like to keep everything on the same accord. I don't try to like really lead too many people, like especially like if it's any new people on the call. I don't want to like lose nobody or confuse them. USD CAD. Where was it? This red area. A lot of y'all know that's the gap on the daily. Wow, so it filled that gap then. I didn't even know. I didn't even check USD CAD. I didn't know it filled that gap finally. That was a nice move. Oh, this it right here. This is it right here. Wednesday morning. All right, gotta go. Go. I think I kind of just like I was at work early this morning. I didn't really get to look at it, but I know like I was getting ready for a buy because the news. I think it was CAD news that was coming out, and we're basically getting ready for a buy. But I like it because I think at this point, I think like around like this candle out of these two candles was getting ready for buys. Somewhere in this area. Let me see. Just put the candle on. Somewhere in these areas we was getting ready for a buy. But the news came out, and I remember now. I remember. Buy limit. It was a buy limit set down here, low. Somewhere, I think it was some. I'm not too sure, but I know it was like somewhere like. All right. I don't know why I just cut off, but I'm back on now. I hope y'all can still hear me. But I can't remember exactly what happened, but I know it was a price action type of thing. Like we were basically like waiting for price to like come down below. So like this blue line. I'll make it red. So like this red line. Or maybe it wasn't right here. Oh, all right. I ain't gonna take too long. My boy WallStreet Ray gonna hop on, So I ain't gonna take too long. I ain't really got too much anyways. All I got is USD CAD, USD Swish, and SPX. We was getting ready for like a buy limit. Like I guess it was like this last down candle for the up move, and was getting ready to buy it up. But you see that that was you know how that went. Like we had the 15. I had the 10 pip stop. I ain't gonna lie, because I was very confident in it too, and it just broke right through it. The reason why it broke right through it, let me pull up the volume sector, because volume was still growing and it was bearish. Plus on the fact that like it probably would have been like we probably would have got like a full like a nice like amount. Maybe we would have like had a buy limit set like down here. But the thing, what I'm trying to say, like a lot of people in London, in New York, they was waiting for that down move to go up, and then they was basically saying that would be the move for the day. But the move for the day was that bearish move, and you can tell because this candle took out a lot of highs, like a lot of highs, a lot of liquidity, like back here in this area. And then just like EU, like a lot of pairs don't move the same, but the banks move like real similar when they in these markets. So they broke this candle, broke liquidity all the way to the left. Throw the eye on top, real smart money. And then this candle doji a little bit before New York. And like a lot of people would have been trying to buy, but at this particular time, the banks was like basically like they was in sales. If CAD news would have came out, I think it came out bearish, but if it would have came out bullish, all they would have did was like make it a doji. And you see like the mood for that day, like the bank's move for the day was about like 85 pips. The banks, they do like move like 100 pips, like 200 pips, but for their daily moves, like they just do like they have specific targets. They all be in the break room like, oh, we gonna move USD CAD today? Yeah, we're gonna move it. We're gonna move about 80 pips, 60 pips. They gonna think it's gonna go up. We're gonna make it go down. So yeah, that's what I seen for USD CAD, and that's what made me start using volume. And after NFP week, it's been going like just bears for a long time. So I can go ahead and just say that we're going ahead and like starting to look up. I pretty much do recaps for the weekend. I don't make new predictions for the week until like Ray and Kirk will do their outlook calls for the weekend, because once they make the outlook calls, I just like back go and I go to work and I just like pretty much like mark off whatever they was working on. USD Swish, Thursday. Yeah, Thursday. I was trying to get in it. I think I got off coffee. Yeah, I think we were talking about coffee and pills. Sometimes like we'll talk about coffee and pills, but I'll be so busy at work I'll have to like get off, and then like I'll just have to like just hop back on when it can. A lot of lows down here. Lots of lows. This was the last down candle before the up move. And me personally, I was waiting on that too. And I like how you see this very bearish candle. And then it started like push up. Too. I was ready for it to think a little bit in between. And then like take off to the upside. Just take out these highs. Just to take out them highs. Got to throw the eyes. Got to throw the eyes. All right. Now, the problem with this, it's not even like this was just like a tricky move. Period. Like just a very tricky move because this was a low, but it didn't even make a new set of lows before it took out these lows. Like these lows at the bottom, they're not like really like balanced out. I like to see like real equal lows. None of these lows like really equal. You can say like the closes was equal, but I didn't really like consider those equal lows. For volume, you see like right at 7, we was very bullish for we was very bullish for UNC Swish. But then it just turned right bearish. It just turned right back bearish again. I wasn't expecting the fall, but I ain't gonna lie, I took the fall. I took the fall twice because I took the original fall, and then it was falling again. And then I was like, all right, it's time to buy back up. It's time to buy back up for the end of New York. And I tried to buy it, and it did not work out again. So, and crazy enough, the next day was the day when everything switched around. And look how this candle took out those highs. And even took out these highs. Now we're starting to see bearish momentum. So if anybody like want to like look at their correlations for the week, I'm bearish. Yeah, I'm bearish EU, and I'm bullish the dollar. I'm bullish the dollar because the news that came out was what I was expecting. I was expecting for the economy to recover so fast. A lot of people was like really like tripping. They was tripping, talking about like everything was closing, the economy closing everything, and so as soon as everything opened back up, big spike. That's why I like SPX. It did break into that liquidity zone, but the news was still bullish for the dollar. Released data from last month. I can't remember exactly when they opened it, but like that data, I was expecting like a reversal, like somehow, some way, and that reversal like came out like that reversal came out pretty nice. I'm still like getting used to like the fundamentals and everything, but I'm real good with the fundamentals. So like I said, like I studied like this Forex night, like I study in school too, or I'll study it like just like on my day-to-day basis. So for SPX, I mean, just by looking at it, I'm not really too sure. I don't really trade SPX like that. I trade SPX only for buys because I kind of trade it how I invest. So like if I start seeing that SPX is dying down, then I know I need to start buying SPX Forex wise, and I need to start buying it like investment wise. So for the most part, I'm just looking for that. But at the same time, still be careful. Let me go out to the daily because since the crash, we have been very bullish for the longest. And I was saying that's why I was saying in this zone where it's kind of like held up last time, we're kind of just like had a little hiccup real quick. It just continued to fall again. I figured it was like going to like stop and hiccup again, though, but it really just like broke directly through it. But it's all good. But I'm still waiting for some type of pullback. You look on the RSI on the daily, that's telling me we're due for a pullback. You know, things is already crazy in the world right now, in the economy right now. Let's just see how it goes. But other than that, man, That's all I got. My boy Ray wanna go ahead and hop on. Hey Ray, if you ready, you can go ahead and like take over, bro. I'm finna go ahead and stop my screen. But yeah, that's it, man. This was a live week, a real live week, super live week. Appreciate y'all for hopping on, for real. Well done me. But yeah, Ray, if you're ready, you can go ahead and hop on, bro. I'm finna get ready to come down now.
All right. I appreciate you, Reggie, man. And big shout out to you. Reggie just gave a lot of value. Especially talking about with volume, right? Volume is something that can definitely help a lot of people. If you're looking for that precise, area where liquidity is being engineered into the markets, that can save you from a lot of, early entries and, getting in the market at the wrong time. So, that was phenomenal training, bro. And, much love for you. It's great to see your growth and just the development. We see you, getting better and better, bro. So that's a blessing. But just to kick things off, we have a similar approach to the market, just looking for, liquidity pools and stuff of that nature. So just kicking it off, right? Starting with the DXY. Yeah, I'm actually going to start from the weekly, all right? Because just so we can get a clear understanding of what's going on. So obviously, get my arrow tool. As we can see, we created some double tops right here, right? Equal highs. We popped up above. We made a peak high, then we made a lower low that broke this structure, right? So although we've been retracing for literally a couple years, when we popped up and had this impulsive candle shoot up right here, and you realize that it came into this region here, that's just a retracement, right? So understanding that, we can anticipate further downside movement long term, in my opinion, just to, kind of end the year. Because throughout all this consolidation, we knew that the market eventually wanted to go down, but there was no impulsive, institutionally sponsored moves. So all of this is just consolidation. It's just building up, accumulating. And then once we actually pop up, that's when we could actually, actually start to have that follow through to the downside. So, but I just want y'all to really realize. Let me turn this TV and get my food. Oh, real quick. Make sure y'all can hear me. So now that we got that move, right, long term, I do believe we'll continue to trade down. However, I do think we'll get a nice little bounce in here due to this imbalance, right? So as you can see here, we have an imbalance. Also on the weekly chart, we're in that last down candle before that up move. There was a gap also in there that we filled out with this move here. The other thing that makes me feel good about it is this candle here, okay? Because when the market is creeping down slowly and choppy, right, that's not really what you want to buy yet, right? Because the market rarely ever just goes down slow like this and then pops up. A lot of times you're going to have that sell-off into the liquidity before we get that push up. So just with this, where might the market retrace back up to? Because I do believe we'll go bullish, probably into a region in here of some sort, right? I see a lot of previous support, turn resistance in this region. Also, it's a fair value gap there. Also, inefficient price here. Let me see. Obviously, it doesn't have to come up that high. Just ideally, I would like to see it happen. All right. We come up, then we continue back down even lower. I don't believe we'll get back up here since we already went down and took out these lows, because when we were just trapped in consolidation here, all right, I believe that we had actually come up, take these highs, and then go lower. But considering that that didn't happen and we just continued to drop, right now I'm looking for this region to be, you know, retested, you know, maybe sometime next week, right? So we'll probably go bullish next week, then, you know, continue back down bearish, right? So understanding that we're probably about to get some bullish price on the DXY, we can expect GU to start, you know, making a slight little drop. And it makes sense, you know, it's in that area. This is something, you know, we talked about a week ago. We had created this double bottom. We pushed down in the sell side liquidity right here. We popped up, retest. Now we know continuing up. Now long term, okay, I wouldn't be surprised to see GU come all the way up here and capture that liquidity up there, right? But just for the time being, I think we will get a reaction, okay? I do believe we'll get a reaction in this zone, get some retracement, probably back into this order block here, somewhere in here, and then we'll continue back up, all right, to capture these highs here. So break it down a little more precise. This is something we definitely want to see. It was actually a target. I'm just not the best swing trader, but I definitely should have held this because I got in a buy here. I closed out some of it at this high and some of it a little bit at this high. But knowing that this was my target, realistically, I probably should have held it. But, you know, it's all good. But understanding that this here is like that weekly up candle before the down move, this whole area, it can be considered like a weekly order block, all right? Okay. So understanding that, price come back to this line, it's a high probability we'll get that reaction back down. So now zooming in, also see an area of imbalance, right? And a previous support right here, where we have support, turn resistance over here, right? We have previous support, turn resistance. Also within that area, small little imbalance. It's very small, but it's very important as well, because what you'll notice is that everywhere else, the market will fill these little gaps, right? So look, even here, you have a gap because that big candle has a wick on this side, a small wick over there, small wick over there, but it's a lot of that body that hasn't been filled. Boom, which is why the market comes back up into it and then drops. Even here, right? Comes back up, drops, little gap there, but it'll always come back and get filled eventually, right? Now, when, you know, you just have to be able to, you know, read the chart analysis. And like, whenever I see a double top form, I always look to the left to see if there's an area where the banks are hiding at, because they're trying to engineer, you know, sales when they create that double top. So whenever I see a double top, I look over to the left to see if there's an area that the banks can be hiding where I can't necessarily see them, all right? So understanding that 1.27 region, okay, is an area where we can get that reaction. Got the weekly order block. We have liquidity resting above the highs, right? We took those highs, and now we're anticipating the DXY to go bullish, at least for a little bit, right? So we should probably get a nice little sell-off here. Probably take out some of these immediate lows, right? Those smaller time frame lows probably. And let's see. Potential in there as well. So a potential area we can get a move, because I just like to see some of these smaller term lows get taken out. There is some imbalance in there. It's also, you know, previous zone over here. We could retrace down here as well. So I'm not just going to take it blindly when it gets there. We're still going to analyze the price action, right? However, you know, I would like to see some of those lows get taken out. We push back into this little fair value gap. Everything else down here has been closed up. Gap here got closed up. Gap got closed somewhat. This is the only area that really has a pool of liquidity that we can actually capture. I would like to see something like that. Probably get a sell. See the 30-minute left shoulder head, potential right shoulder for me. Consolidation, probably get a spike up. Then push down. Okay, so I'll be looking for that to correlate with the strong dollar, at least for, you know, the week. And you know, stuff has been improving as well so far as you know, you know, unemployment, you know, there's jobs that are coming back, you know, stuff is happening. Obviously, we've seen the stock market make a huge comeback. So you know, you could probably get like a bullish dollar just for, you know, just for show for now. All right. Let's see what else we got. We can take a peek at. All right, same with Euro USD. All right. So understanding that that's the institutional candle, we'll get a drop off here. Now, how far we go just has to be seen, right? We do have a breaker right here, a breaker block, right? So when you see like that major reversal zone get broken, right, we can look for that to potentially come back and be retested. In the same way institutional candles work, when you see a gap overlaying them, right? So a lot of times you'll see an up candle before a down move or vice versa, and overlaying it, you have that small little efficient price where it's that gap, right? High probability trade setups. All right, same thing here. Got the gap, right? Market trades back up into that institutional, and then it's going to give you that drop off. So just knowing this, any retracement should be valid. Right, the market could definitely come up here. I'm aware of that, but you know, just for the sake of not missing the trade, probably take a little smaller entry here. If it pushes up, might be able to scale into an entry by taking another one at a higher point. But I am looking for some type of retracement. Right, had a impulsive push up. Okay, we created equal highs here. Impulsive push up. This is how you know the institutions are getting behind the move. Impulsive push up, we snap down, then we break support. So now we broke support, look for any type of retracement. We come up, then we'll continue back down, all right? Hey, just a sec, guys, just a sec, all right? All right, so again, and now remember, it doesn't matter what happens as much as where it happens. So realizing that we broke structure right here, right? This is market structure. We broke a higher low point right here. You see how the market pops up and makes a higher low than the previous lows and then pushes up again. But now since we broke below it, we can anticipate bearish overall momentum. All right, because we traded into this red line, which was the daily order block. So now that you see a daily like a daily zone where you could potentially get a reaction, you want to start looking at the smaller time frames to see if those smaller time frames are following suit. All right. So just with this, I'm anticipating the market to come down. Right. We actually got some lows here. Little institutional down there. We may be able to trade into. Right. So regardless, trade up, take some lows here, maybe even trade into this, to be quite honest, because I do like that imbalance right there. Okay. So we'll probably trade into this region here. And that's what I could see it trading into about a 30 pip range, right? So when we get there, that's when we'll, cross the bridge, but then anticipate some sales. GCAD was stressing me out. Let's take a look at S&P. All right, so overall on the S&P 500, I got the market coming right there, okay? Reason being is because so inefficient price up here that I feel like needs to be filled out. Understanding that this was a huge sell-off, right? This was the biggest sell-off in like American history, for the time span. So just understanding that there's probably a lot of imbalance in all of this down move, right? Just a lot of sells and no buys, and understand that the people that are literally creating these candlestick, like creating the patterns, they have to come back to these areas for the market to quite literally make sense. That's why everything always fills itself out. Even this gap here, right? This is a gap that I was watching, and when the market came up to it, I took sales here and I got another sell right there, right? We're going to look at this on a smaller time frame too. I'm going to show y'all the example, like the last example, and then what I'm anticipating is going to happen when we trade into the next gap. Okay, so realizing that this is a daily gap, we traded up into it, right? Now you could have took a sell just coming to the top of that inefficient price, right? Coming to the top of that zone, once you get a nice little reaction, right? You could have took that trade, just being honest. Let's say you missed it though, okay? You missed it. You missed this whole little move. It's okay, right? 7,000 pips. Now the market comes back, okay? Now look for the same thing, right? Now, if we looking for gaps to form, right? Gaps, right? You see all these gaps all over the market, right? Let's just say the market's right here. Why would we anticipate sales from this region, right? When the market trades back up into it. Why? Because if we look to the left, we see another gap right there. It's a gap within a gap, right? So let's go ahead and mark that off. Okay. So when the market comes back up, okay, we trade to the top of it. You could take that sell, right? You could take the sell off that being the institutional last up before the down move. And again, when you see an up move before a down move and a gap laying in it, that's the highest probability trade setups you could take, all right? So you see, we react. Then once you get the reaction and it pushes away, you want to see an immediate reaction, right? Because the thing is, the thing about these mitigation moves, you want to see the market move away from that zone aggressively, right? Even when it consolidated right here, that's okay because it wasn't making higher highs, but it kept making lower highs. But once it broke out beneath that low, it has to be aggressive. And I'm going to show you another example of this for when it's not aggressive. Because when it's not aggressive, that's when you know it's not a real mitigation move, right? And I'm going to show you another example after. So again, we push up, no bodies up there, and then strong, big, strong candles, all right? So now that we look for the gaps, we know what to look for. We're coming up to this one. Since I know we're coming up to this one, I'm literally still in buys. Like I took a buy right here, and I took a buy up here, okay? And I'm still in this one right here. So just to show y'all how we got that move, right? Understanding that the higher time frame is bullish. This is why you have to get your projections on the higher time frame. Because if you don't have your projections, you're not going to know if you should be taking any higher low buys or any retracements and stuff like that. So since I already know the institutional flow that I'm in, right? I already know, where I'm going based off the higher time frame. I could pretty much take any retracement because I know where we're going long term. So this one, for example, right?